As oil and other commodity prices soar, the Governor of the Reserve Bank, Philip Lowe, ventured out to give us a bulletin from the bunker. He said two noteworthy things. First, they've got scope to wait before raising interest rates. The RBA can be patient, he said, in a way that countries with substantially higher inflation cannot. And second, when asked if he's still waiting for two more quarterly consumer price indexes, he said, "We don't have a plan," which presumably means one CPI might do. The next is due in late April, so the rate hike could be May, but more likely June. So is that being patient? Well, everything's relative. To illustrate the difference in inflation rates, he showed this graph of American and Australian goods inflation, and this graph of wages. Now, it shows how much current wages growth differs from the average of 2010 to 2019. In Australia, it's lower. In the US and UK, it's much higher. On the other hand, we're in the midst of an oil shock. This chart shows the oil price in nominal and real terms, that is, in today's dollars. And on that basis, it's back virtually to where it was after the second oil shock in 1979. The next CPI could be almost anything. Tonight, the Brent crude price is above $130 US a barrel, the highest since July 2008, just before the global economy drove off a cliff. Nickel doubled to $100,000 a tonne, and then the market closed because someone who bet the price would fall got caught and had to pay anything to cover the bet. Today's 1% rise on the local share market was all about strong buying of banks as investors look for safety. Stocks in New York and Shanghai went up, but fell in Tokyo and Singapore, and the Australian dollar stayed at just under 73 US cents. And that's finance. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.